Because I'm waiting for you.
What's up? Hello, hello. Is the live stream on? That's very interesting. Is it on? Well, there you go. Well, this is interesting. Technical difficulties are causing us to not be able to do our live stream, and I'm finally live. So I'm starting live stream. It's third time's the charm. So what's up, everybody? Welcome back to my live stream. Technical difficulties. After coming back from vacations, things can somehow be hectic and causing me to have weird technical difficulties. But what's up, everybody? Welcome back to the stream. Today I want to talk about something very, very important. I want to talk about what's been happening in the crypto chart because something crazy is happening. Bitcoin dumped 13%. It dumped to 25,200. People are going very, very fearful. The market is going insane. People are very, very scared right now. We dumped 13% in a matter of days, just 2 days. And what's crazy is that the fear and greed is now at 37. It used to be at 50, now it's at 37. It fell from 50 to 37 in one day. That's crazy. I remember I talked about the fear and greed for a while. I talked about how we were trying to confirm support at this white line and that we could not decide what we were going to do. And that if we confirmed support at this white line, we would rise up. If we broke it, we would fall down. Now, the question is, what happened? As you guys can see, it fell down. And as soon as it fell down, the fear and greed finally decided that people are fearful. And we fell down to $24,000. Now, today, I want to talk about what I think will happen for Bitcoin later, because something very interesting is going to happen. We do not know what's going to happen right this second, but we can look at different indicators to figure out what's going to happen. Like, for example, fear and greed. Fear and greed is very low right now. Of course, this is not a long-term indicator, but fear and greed shows that people are starting to doubt that the Bitcoin market will fall. Or will rise up. They're doubting that the bull market will happen. People used to be at 50. That means they couldn't decide whether the bull market's going to happen. And that was because Bitcoin was at $30,000 for a while. We were consolidating. And now we fell down 13% to 25,000. What's interesting is that on some exchanges, for example, on Bybit, we did not fall down to 25,000. We fell down to 23,000, which is very, very interesting. We fell down much, much farther on exchanges like Bybit. I don't know if this is a glitch or not, but we will stick to Coinbase for the time being. And this is the Coinbase chart, and we fell down to 25,000. What's interesting is that we fell down to a huge support level. If I grab the Fibonacci retracement from the trend low to the trend high, we can see that we fell down to a huge level, the 0.382 level, 25,600. This support level, it's pretty big, but it's not as big as lower levels that we usually fall down to for a quick correction before rising up. Usually in these quick corrections, if this is a correction, technically we should fall down to lower levels, like for example 22,000 or 20,000. So it makes you think, are we going to stop here and rise up, or will we fall? That's the biggest question. Will we confirm support at this level? This level is very, very big, but there's a ton of bearishness. Fear and greed. The RSI looks very low on the daily time frame. It's at 20. Technically, that's an extreme fear right there. Last time we were at 20 was all the way over here in June of 2022. We were very, very low. But as you can see, it was just a short trend up before falling down because the RSI on the daily time frame does not show long-term trends. That's what the weekly time frame is for. And also, the RSI is not a good indicator to just trade alone. Lots of rookie traders take the RSI way too seriously and think that if the RSI is, for example, down over here at 26, you buy and you hold till it's at 70. Of course, you will make money sometimes like that, but it's not a guarantee because the RSI is way too simple to understand. And many people use it, which means that If you try to find some kind of secret, you cannot use the RSI. The RSI is way too simple. And you cannot use it alone. You have to take it with a couple other indicators. But even if you use it and pair it with stochastic RSI and other indicators, it's still not a perfect indicator, but it still is valuable. It is valuable to see how strong the bearish market is. And as you guys can see right here, the bearish market is super, super strong right now. It is falling down. People are selling like crazy. And the question is, was this a huge whale? Was this a whale or is this an actual dump? Because the dump happens so fast and there's no volume. If we look at the volume on the weekly time frame, there was no volume. If we look at candles that happened, like dumps that happened before, like this dump right over here, this dump was almost the same size. It's a bit bigger, probably by like $1,000. But its volume was 6, 7 times bigger than this volume. This volume didn't even break this trend that I was talking about. For a huge move that's supposed to happen for us, we need to see a huge spike in volume for a huge move. And for some reason, we don't see that huge move. So the question is, what are we going to do? Are we going to confirm support on this huge Fibonacci? Well, we need some volume. We need a ton of volume right now. Now, not just the fact that the RSI is low, but the stochastic RSI, it's also falling down. These are two indicators that show the strength in Bitcoin. Now, on the daily time frame, yes, it does look like it's super, super oversold, that we should rise up because we're at 20. When we're at 20, that means that it's an incredible time to buy technically. That's how the RSI works. When it's at the 20 point, people say that it's an incredible time to buy, but it's on the daily time frame. It could be a small rise up. On the weekly time frame, which is used for long term, for bearish and bullish trends that are long term, we can see that the RSI is right now at 50. We haven't even reached the oversold or overbought area. Oversold is at 70, oversold is at 45. Overbought is at 70. After that, then you have multiple stages. Then you have at 40, you have already, it's a great time to buy. And at 30, that's already, anything below 30 technically is an incredible time to buy. Of course, you can't just take the RSI like that. And on the weekly time frame, the RSI is not that low at all. It's at 50. It's at 45. That's where it is right now. And stochastic RSI is also falling. So technically, on the weekly time frame, it shows that the bearish trend might not be over. And that's not the only bearish things. If I go and show you guys the moving averages on the weekly time frame, it's crazy. The moving averages on the weekly time frame shows that we broke 3 indicators. We are now below 3 indicators, 3 major indicators, 3 major moving averages that are very important for us to be. If we are below these indicators, we cannot be in a bull market. As long as we are below the 200-week moving average, we are in technically a bear market. Of course, you can't just jump into conclusions. You can't just say that we are in a bear market just because we broke below this level. As you guys can see, we had 3 months of 3 candles right over here, which was on the weekly time frame, 3 weeks. And these 3 weeks were below this candle. But the difference between this candle and this candle right over here is that this confirmed that it did not confirm. Sorry, I need some water real quick. The fact that this candle is different than this candle, what's different is that we confirmed support on it. We did not confirm resistance. If we would have confirmed resistance, we would have seen a fall. But we did not confirm resistance. We broke back above it. This was a fake out. Now, if this is a fake out for us, we need to rise back. And that's a problem because we have already closed this candle. This is a new candle below. So now we have 1, 2, 3 key levels of resistance for us that we need to break to rise back up. And instead of, like right over here, the 20 and the 200 week moving averages were grouped together. They're pretty spaced apart. So now we have 2 huge resistance lines that we need to break. We have broken below huge key resistance areas. Of course, this does not mean that we are in a bear market. And what makes it worse is that on the monthly time frame, we have broken below the 20-month moving average. And if we confirm a new candle below the 20-month moving average, that will be very bad for Bitcoin. And this candle closes in 8 days. If we close below the 20 and maybe even the 50, because by the looks of it, we are below the 50-month moving average right now. If we close below these two, indicators, these two indicators will be huge for Bitcoin. They will be huge levels of resistance that could be bearish. And it all matters what we do soon. It all matters what we do this week, because we need this week. This week we need to rise up and break above this level. Now, just because we will start rising up does not mean that we are out of the blue, because as you know, we are confirming support, like I said already, on the Fibonacci retracement at the 0.382 level right over here. If we start rising up, by the time we reach the 200 week moving average, we could be at the 0.236 at $28,000 straight on the dollar. And what's interesting is that this level also coincides with an interesting level that's known as an ABC correction wave. The 0.618 retracement level of this tiny Fibonacci shows that we could rise up to that 0.618 level, get rejected, and fall down farther. That's what an ABC correction is. All it is a A wave, a B wave up that goes to 0.618, and a fall down. And the fall down is around 1.618. It's a bit complicated, but these are huge support levels for Bitcoin. What I'm trying to say is that if we confirm support at 25,600 and we rise up to 27,000 to $28,000 straight, we need to break above that support level. By the looks of it, because the RSI is so low, we will probably rise up to this level. That's what we need to watch right now. If we confirm support and start rising up, we are now not out. Do not be celebrating, because we need to break above $28,000 and confirm support. If we get rejected and start falling down, then we will most likely start falling down, and we will fall down much, much farther. How do we know how far we're going to go? Well, there's a ton of indicators. For example, technically, of course, this does not look that great, but there technically is a head and shoulders. So a friend pointed this out to me, and I'm like, it doesn't look that great, but there technically is a shoulder, a head, and another shoulder. And what's interesting is that the target of this head and shoulders pattern, if I take and I drag it, if I can actually grab it, the target of this head and shoulders is at $21,000. And that's very interesting. Of course, it sounds random and sounds a bit too far, but it's at the 0.618 level. I'm not saying that this is supposed to happen. This head and shoulders does not look that great, but the target is to $21,000, which is perfectly the 0.618 retracement level. And of course, that means that this is not a bearish trend. Of course, it is a bearish trend in the short term, but in the long term, it's just a small correction before we see a pump up once again. It's just a continuation in the trend. It's just a cycle. Just like we have done cycles in the past, just smaller, we could be doing a cycle that's bigger before doing another cycle up. That's how trends work. And if this is the trend down, technically we could fall down to $21,000. Of course, these two indicators are not enough to tell us that we will fall down to $20,000, but there is something else. There is something called realized price. And what realized price is, if I go down here, is all it is just the value of all the Bitcoin. For example, the last price, the price of Bitcoin divided by how much Bitcoin there is. Because you guys know that the Bitcoin comes out every 10 minutes. So there's new Bitcoin. So the value of Bitcoin divided by the amount of Bitcoin is that realized price. And what I want to look at is this in the long term. Before we do that, just a quick sip of water. The realized price for Bitcoin right now is at 20,300 compared to where Bitcoin is at 26,000. Usually we fall down to the realized price before we start doing a huge pump up. For example, right over here, after we fell down from $20,000 all the way down to this was $1,000. When we fell from $1,000 all the way down to $200, we fell to this realized price, quickly tapping below it, but then quickly creating a support and rising up into a new bull market before that took us to $20,000 before causing us to fall down again to the realized price that was at $4,000, slightly breaking below it and rising up. We only break below it when we fall down, and that's exactly what we did right over here. We fell down to about the realized price, which was at $19,000. And what this means is that the realized price is the floor. It is the floor for Bitcoin. We are most likely never going to go below the realized price once again. As you can see, Bitcoin's most of the time stays above this realized price and does not fall down below it. Only in certain rare occasions when we have fallen from a bull market. And what this means is that technically we could right now see a tap to $20,000, the realized price, the fair price for Bitcoin, before rising up. Now, that's not the only thing. A dump down to $20,000 would make sense in the long term because, as you guys know, there are halving cycles. How halving cycles work is that there are already set things that Bitcoin does in certain times of the halving. For example, we look at the first halving that ever occurred, the first cycle for Bitcoin. The first cycle for Bitcoin went like this. Bitcoin rose up in the first year, reached all-time high, and then after that, the second and almost third year was basically a decline, and then the last year was kind of just a sideways up. Okay? Now, second halving. The second halving went like this. We had another rise up in the first year, not fourth year, the first year. After that, we had a dump down. We were in the yellow. This is about the second to third year, yellowish orange. Just like we were right over here, we created the bottom at the yellowish to orangish. But we went up and we fell down, not creating a new bull market in the long term, but making a small bull market in the short term. We rose to $13,000. A lot of people probably thought that this was going to be the trend that was going to take us to 100,000, but no, we fell down, and we fell down to $4,000. Of course, that was because of coronavirus, but we did not create a trend. After the halving happened, then we rose up to $60,000. And just like 2 times in the past already, we had the market top right over here when we were green. Not when we were bluish green, not when we were teal, when we were green. Here's when we were green. We had the top right over here at $20,000 when we were at the green. And right over here, same time for Bitcoin, at around the half quarter, the 1.5 years into the halving, that's about where we had the top. And after that, we fell down till we were at the about yellow to orange. And now we are starting to rise up. And again, just like 2 times before, people are once again thinking that this is going to be the time when we will right now see a pump up to $100,000 right now, next month. It will happen very, very soon. And what I'm saying is that it might not even happen till the halving. We might just see a slight rise up, maybe reaching $50,000, but dumping and rising like we have been doing for already a while now. For over a year, we have been just slowly rising up. We were at 15,000, now we went to 32, now we are at 25, and we will continue doing this until the halving. Now, after the halving, you can be certain that the Bitcoin bull market will start. That's what we did right over here. Technically, people say that we started right after Corona, but you can see that we reached the same level at the bull market and then waited a little tiny bit before rising up. So what this could mean is that we could be seeing these little tiny trends, just like we did right over here, maybe rising up, maybe rising down, but we will not see a bull market until the halving, most likely, until we see a ton of momentum. And right now, that's something that we do not see. And history shows us that we do not see bull markets until the halving. The cycle is 4 years, and that bull market cycle already happened in this 4 years. But this 4-year cycle is about to end, and the halving will happen April 2024. Until then, of course, we can rise up, we can fall down, but we will not see probably all-time highs until 2024. That is reasonable. Of course, there could be real world scenarios, real world events that could happen that could disprove this theory. This is just the Bitcoin halving cycle. This is a prediction. This is not 100% true. But looking at scenarios right now, if we confirm support at this level, 0.382, 25,500, and rise up to 0.236, 28,000, gets rejected. This is an ABC correction, a classic ABC correction that could take us to $20,000. After that $20,000, by the time we're there, this is already, for example, October or November. And then we start rising up. It's already January. Wow, we're back here at this level. It's already February. This is all This all makes sense. If we do this, then by the time we reach this level once again, it could be April 2024. The halving could be back. Of course, some people will say, wow, we're in a bull market, because we are. We are having a bullish trend, but it's not the type of bullish trend that happened at the last leg of the cycle. These are two different trends. This is the trend before the cycle. Let me before the halving. This is the trend after the halving. You can see that we could be doing the same exact thing as we were doing right over here before the halving, already done before. We are testing the same exact things. And now, in the short term, that's what matters right now. It matters for us to break above $28,000. Now, if anybody has any questions about anything they want me to talk about, just write in the chat. But if nobody has any questions, I will end the stream very, very soon. But before we do that, I do want to talk about something very, very interesting. But before we do that, another sip of water. What I want to talk about is very interesting. It's other cryptos, and specifically Bitcoin's power with other cryptos. If I do look at the Bitcoin dominance, which I do not have open, so I have to open it, so give me a second. Here you go. Bitcoin's dominance suffered very, very little. It didn't fall that far compared to everything else. You can see right over here. It's still at around 50%. And what this means is that people, just like Bitcoin, are scared for other altcoins. They're scared for other cryptos. And we can see this by looking at, for example, Ethereum. Let's find Ethereum USD. Check it on Coinbase. You can see Ethereum also fell down. It fell down to $1,500. It fell from the top down to the bottom 17%. It fell more than Bitcoin. And what this means is that people are scared, just like Bitcoin, to Ethereum. But what's even more interesting is that not just crypto, stocks are also falling. Let's look at Amazon. Amazon, you can see, also suffered a big hit. It fell down very, very far. Not just that. Let's look at S&P 500. S&P 500 fell down a lot. Everything kind of crashed, and that's very, very interesting. Somebody asked, can you look at the stocks and compare them to Bitcoin? Sure. You can, if we grab the stocks right now and compare them to Bitcoin, and for me, we grab it like this. You can see stocks are on the top, Bitcoin is at the bottom. Bitcoin and stocks actually will be much better if we actually check it from here, from Bitcoin's perspective, because stocks and Bitcoin are different, because stocks open from 6:30 to 4 about. It depends which time zone you're in, and Bitcoin goes 24 hours a day. It never stops. So comparing stocks to Bitcoin usually means going on the Bitcoin chart and checking it, and checking Bitcoin with stocks. Now, if I pull up on this chart some stocks, S&P 500, that is not S&P 500. Here you go. Right over here. You guys can see that Bitcoin, for some reason, it's not pulling up. There you go. But once again, something very interesting is happening. That is, what is this? Here you go. Now, okay, never mind. There you go. Now, stocks compared to Bitcoin is very, very interesting. Bitcoin is rising up. Okay. I'm sorry, guys. This is very, very interesting. What is happening? There you go. Now, stocks and Bitcoin are also falling down at the same time. I talked about this multiple times. Stocks correlate with Bitcoin. Stocks, which is S&P 500, I'm looking at S&P 500, also fell just like Bitcoin. But Bitcoin is more volatile. Traders usually sell crypto first. Majority first, altcoins, then Bitcoin, then stocks last, because they trade their risk. They sell their risk first. So, looking at Bitcoin, you can see that Bitcoin was the first to actually stop rising up. This is where it peaked. Technically, it started rising down, falling down. But S&P 500 followed about, let's see, from July 12th to July 27th. about 2 weeks later. That's normal. And you can see that this dump, Bitcoin leaded the dump first. But what's interesting is that S&P 500 and stocks usually lead the rise. They rise first. So, looking at S&P 500, you can see that we had a small pump up. What this means is that Bitcoin could see a rise up too. Now, this is not certain. We sometimes decouple from stocks. Sometimes we did not do the same thing. Sometimes we overdo what stocks did, and we actually fall down or rise up more than stocks. Or the opposite, we actually don't even follow stocks at all. We decouple from stocks for a bit. And you can see that technically, if my calculation is correct and this is an ABC correction wave, then a rise up to 28,000 would follow S&P 500 exactly how it's doing right now. And now, for us to confirm the theory, we can actually look at S&P 500 itself. Looking at S&P 500 itself is very, very interesting. If we open S&P 500 right over here, you can see that this pump right over here is this tiny pump right over here. This rise that we had, that I'm talking about right over here at S&P 500, that's Bitcoin is supposed to do, this is the rise. Compared to the dump, it is tiny. And looking and taking the Fibonacci retracement and checking the dump shows us that we have now tapped a resistance level at 0.238. That is at 4,400 points. Now we were at 4,600 points, so we fell 400 points. This was for S&P 500 a big correction. It was a 6% correction, and now of course we rose up a little tiny bit. And technically for S&P 500, we could rise all the way to 4,500. 4,516 points before falling down, because just like Bitcoin, stocks could also be doing an ABC correction wave. Now, unlike technical analysis, there are also very big world events that could cause stocks to fall down, and that's where decoupling comes in, because as long as Bitcoin is correlated with stocks and stocks is correlated with dollar, when the dollar does bad, Bitcoin does bad, because Bitcoin is correlated with stocks. Now, if Bitcoin decouples, and Bitcoin is the opposite of the dollar basically, so it should decouple, when it decouples, we will see a huge pump in Bitcoin and a crash in S&P 500. So, yes, it is my birthday, guys. Thank you. But what I want to say is that right now, Bitcoin is correlated with S&P 500. S&P 500 looks like it's doing an ABC correction wave. If it does, that means in the short term, Bitcoin looks like it's going to rise up and then fall down to 20,000. And S&P 500 looks like, if I can pull it up again, looks like it's going to rise up to $4,500 and then fall down to about 41. That is if this is an actual ABC correction wave. Technically, for our stocks, we have done this multiple times in the past. Of course, you can see that it looks way, way different. We have done this in the past way, way differently. We have done these ABC correction waves. For example, right over here, this was an ABC correction wave that caused us to fall down. This dump right over here was around 9%. And we have done 6% so far. The first initial wave was the 6% correction. And after that, we rose up to this 0.5 level before falling down. So technically, we could do the same exact thing that we did in the past. We fall down 6%, rise up to 0.5, and fall down the rest, reaching about 9-10%. That is what stocks do before rising up. That is what S&P 500 does. And if Bitcoin's correlated, well, of course it's going to do that. Somebody asked, why does Bitcoin fall more on some variations of Bitcoin than others? And if they all fall more than other versions, can they pump up higher than other ones? Okay, that was a very interesting way to phrase that sentence, but what I think I see what you're trying to say. You're asking why Bitcoin falls down farther in some exchanges than others. For example, like I said in the beginning of the live stream, Bitcoin fell down on Coinbase to 25,000 on Bybit. Bitcoin, if I pull it up once again, Perpetual right here, Bybit, it fell down to 23,600. And the reason there are variations in different exchanges is because there's leverage, there are traders that the exchanges count, and for example, if a whale sold on Bybit, it will show up much higher on Bybit. Of course, there are little tiny differences in different exchanges because they have different amount of people trading on them. And For example, Bybit had a ton of stop losses set. It's a big exchange. So for example, somebody had a ton of stop losses set at $24,000. If it had a ton of stop losses set at $24,000, then one Bitcoin would tap $24,000. It would be a huge wake up. Now for other exchanges, that doesn't happen. There is no stop loss at 24,000. There's probably no stop loss at 26,000. There's no people that want to trade at this level. So it never falls down for other exchanges. There are different variations for different exchanges because there are different amounts of traders on different exchanges and different little tiny variations, but overall this never happens. Sometimes there are also glitches on different exchanges or whales on different exchanges, and these could cause small variations, but most of the time they all work together because this is one big Bitcoin, one big cryptocurrency that they are all monitoring and, of course, giving their part to Bitcoin because they are allowing people to buy and sell on their own exchange. I think that answers your question. Now, with that being said, I think this live stream is actually time to end it for a little bit. Guys, this live stream is actually going on for a bit. So, with that being said, I am now ending the live stream. I'll see you tomorrow in the next live stream. Hopefully something very, very interesting is going to happen. Once again, remember, a week. There's about 2 weeks left, and we have to see what we're gonna do. If we break above 28,000 and keep rising up, that will save us from this correction down to 20,000. But once again, if we fall down to 20,000, then we will have a chance to buy Bitcoin at a much cheaper price than it is right now. So watch the charts, guys. Stay consistent. I'll see you in the next video. Leave a like down below. Subscribe.